Imagine waking up tomorrow morning, opening your phone, and seeing gold explode across every headline, prices jumping fast, analysts confused, investors rushing in, and one question everywhere: is gold going to 2,500 or crashing back to 2,200? Because right now we are standing at one of the most important moments in gold market history. And what happens next could decide the direction for months, maybe even years. So before we go deeper, if you want real, simple, and powerful gold analysis like this, make sure you hit like and subscribe to the Gold Report, because here we break down what others make complicated and help you stay ahead of the market. Right now, gold is not just moving randomly. There is a story behind every price movement, a hidden force that most people don't fully understand. When you look at the chart, it may feel like gold is just going up and down, but in reality, this is a battle between fear and confidence, between central banks and investors, between global uncertainty and economic stability. And in this battle, two levels have become extremely important: 2,200 and 2,500. Now think about this. Why do these numbers matter so much? Why are analysts around the world focused on these exact zones? The answer is simple: because these are not just prices, they are psychological levels. When gold approaches 2,200, many investors start asking, is this a dip? Is this a buying opportunity? But when gold moves toward 2,500, the question changes completely. Is this the beginning of a massive breakout? Let's break this down step by step in a way that actually makes sense. First, we need to understand what is pushing gold right now. One of the biggest factors is global uncertainty. Every time there is tension in the world, whether it's political conflict, economic instability, or financial fear, gold becomes attractive. Why? Because gold is seen as a safe place. When people don't trust currencies, when markets feel risky, they move toward gold. Now imagine this scenario. If global tensions increase even slightly, gold doesn't just move slowly, it reacts fast. That's when we start seeing sharp upward momentum, and that's exactly how a move toward 2,500 can begin. Not slowly, but suddenly. But here's the other side of the story, and this is where most people get confused. Gold does not only go up. There are times when gold pulls back, sometimes unexpectedly. And one of the biggest reasons for that is interest rates. When interest rates stay high, investors sometimes prefer assets that give returns, like bonds, instead of gold, which does not generate income. And this creates pressure on gold prices. So now you have two powerful forces, pushing in opposite directions. On one side, fear and uncertainty pushing gold higher. On the other side, strong interest rates pulling it down. And right in the middle of this battle sits the current price. This is why the move from here is so important. If gold starts holding above key support levels, especially around the 2,200 zone, it sends a signal to the market. It tells investors that buyers are still strong, that demand is still there, and that the downside may be limited. And once that confidence builds, momentum starts to grow, slowly at first, then faster. And before you realize it, gold begins its journey toward higher levels. But if gold fails to hold that support, if it breaks below with strong pressure, then the entire sentiment changes. Suddenly, fear shifts direction. Instead of fear pushing gold up, fear starts pushing investors out of the market, and that's when corrections happen. Now here's where things get really interesting, because the move toward 2,500 is not just about price, it's about psychology. When gold approaches new highs, something unique happens. More people start paying attention. News channels start talking about it. Social media fills with predictions. And new investors enter the market, not because they understand gold, but because they don't want to miss out. This creates what we call momentum buying. And momentum is powerful. It can push prices beyond what fundamentals alone would justify. It can accelerate moves, turning a slow climb into a rapid surge. And that is exactly how markets sometimes overshoot expectations. So when people ask, will gold go to 2,500? The real answer is not just about economics. It's about behavior. If enough people believe it will happen and act on that belief, it can actually become reality. But at the same time, this is where risk also increases. Because when too many people rush in at the top, even a small pullback can trigger panic selling. And that's how sharp corrections begin. So now you can see why this moment is so critical. We are not just looking at numbers on a chart. We are watching a turning point. Let's go deeper into what could trigger the next big move. One major factor is central bank activity. Around the world, central banks have been increasing their gold reserves. This is not random. This is strategic. When countries buy gold, they are reducing reliance on other currencies, especially during uncertain times. And this creates long-term demand. Think about it. When large institutions accumulate gold, they don't trade like small investors. They don't panic sell on small dips. They hold, and this creates a strong foundation under the price. Now imagine this foundation getting stronger over time. while short-term traders continue to react to news and data. The result? A market that may look volatile in the short term, but remain supported in the long term. Another important factor is inflation. Even when inflation slows down, the fear of it returning remains, and that fear alone is enough to keep gold relevant. Because gold is not just a reaction to inflation, it is also a protection against future uncertainty. So when you combine all these elements, global tension, interest rates, central bank buying, inflation fears, you start to see a bigger picture forming. Gold is not just moving randomly, it is building pressure. And when pressure builds long enough, it eventually releases. That release is what could take gold toward 2,500. But here's something most people don't talk about: timing. Even if gold is destined to go higher, it does not happen in a straight line. Markets move in waves. There are pauses, pullbacks, and consolidations. These are not signs of weakness. They are part of the process. In fact, sometimes the strongest moves come after periods of slow movement, because during those quiet phases, the market is preparing, building energy for the next big move. So if you see gold moving sideways, don't ignore it. That silence can be the calm before the storm. Now let's bring this back to the main question: 2,200 or 2,500? If gold maintains strength above key levels, if buyers continue stepping in, and if global uncertainty remains even slightly elevated, then the path toward 2,500 becomes more realistic. But if gold loses momentum, if strong economic data keeps pressure on it, and if investors shift focus toward other assets, then a move back toward 2,200 becomes possible. This is not about guessing, it's about watching signals. And the smartest investors don't predict blindly. They observe, they adapt, and they position themselves based on what the market is actually doing. So instead of asking only where gold will go, ask yourself, what is the market telling me right now? Because the answer is always there, hidden in price action, waiting to be understood. And this is exactly what we do here on the Gold Report. We simplify the noise and help you focus on what really matters. As we move forward, keep your eyes on key levels, watch how gold reacts to news, and most importantly, stay patient. Because the next big move, whether it's toward 2,200 or 2,500, will not just happen randomly. It will be built step by step, right in front of you. And when it finally happens, those who understood the story early will already be prepared. Before you go, I want to hear your view. Do you think gold is heading toward 2,500, or do you see a pullback coming first? Drop your opinion in the comments, because your perspective matters, and these discussions help everyone understand the market better. If you found this valuable, share it with someone who follows gold, because one insight can change how someone sees the entire market. And make sure you stay connected with the Gold Report, because the next move in gold might come faster than anyone expects.